Folks, I'm hoping that you're excited about this. We're doing a stock market weekly recap, and why are we doing it? Well, we made some changes to the M1 Finance portfolio that I think it's worth detailing. But we're going to start, obviously, as we do, with the Robinhood, then get into the M1 Finance, and just see how we did on the week and what kind of moves we made. We did put more this week into the market than we have, in the last few weeks. So we'll detail that in both accounts here. So just for reference here, darn near all-time highs on this portfolio. We love to see it over 37, but we are down 0.71 on the week. So this week was a little bit rougher for us due to some rough earnings performances, as you might be able to tell. So, but on the month, still up 7%. Fantastic news in that aspect. So great monthly performance from us, and we love it. 3 months out, only up 2.33. Again, I mean, we saw a bit of a stagnant September and half of October, really. That was pretty rough for us. And on the year now, the past year up 32%, which we like. And obviously, you got to show all-time, 88.47%. So we're getting there. We're excited to see it. Let's look at some of the moves we made this week. We actually made some sells, believe it or not. Some people might not believe it. I don't do many buys and sells. But as you can see here, so with my $50 deposit to begin the week, we bought SCHD, $50 of that. That's my normal $50 deposit every single week. Then on Monday, I decided to sell some of my Plug Power shares. 5 of my 11, or I had 13, I should say. 5 of the 13 shares I sold at 41.07 prior to earnings because I expected an earnings miss. Now, they did miss earnings, and the stock fell the following day. But then the day after that, it proceeded to bite me right in the tail, and they shot up. So, you win some, you lose some. I was correct on the earnings prediction, and then somehow they just completely rebounded the next day following that. I don't know. It's hard to say. The stock market is a funky place. But we still obviously have 8 shares, so there's nothing too crazy there. And I was looking actually to buy more on it falling with this money, but that's fine. So with that money, what did we buy? $50 of KBWY, monthly dividend ETF. Love it. $50 of KBWD. We're developing this one really to work on our income generation. And obviously, as you can see from our charts here, don't worry, it's just in small form. But you can see the growth pattern we're seeing in the dividends. So we're going to continue going that up, obviously, by growing the monthly dividend payers. We're able to kind of level that out and earn consistent dividends. So then we also bought some Penn, 1 share of Penn National Gaming. Obviously, one that I bought is a spec play. I only had 2 shares of it, and I've got 3. Bought it at $59.35. It obviously tanked after some bad news on the Barstool Sports side of the business, which is completely just an overreaction. It just is. It's not impacting the business fundamentals by any amount. I just don't necessarily see why the stock fell that much. I think it's an easy buying opportunity, and the shares are worth probably around $100 at this level. So we'll see what that looks like. We also bought $40 of JEPI, and then we made an additional $100 deposit in which we bought $100 of OHI, as I was right around my cost basis, actually, because the stock's fallen pretty decently in the last year. So we went ahead and bought another $100 worth of this, 3.45 shares. Going to increase the income we generate from that by quite a bit too, just due to the fact that it's a great dividend payer. So that's the Robinhood portfolio. Let's look at the M1 Finance here. You look at the last week, still down 0.48%. So again, a lot of that's because of my higher weight in Disney. Look at that new Facebook logo. Look at that Meta logo. Look at that. On the month, up 8.82, which is fantastic. 3 months, 6.5 up, which is very nice too. On the year, up 45%, and all-time 161%. And remember, this is money weighted. So if you look at solely the core holdings, which is worth looking at. If you exclude dividends, we are up all-time 48.9, or an unrealized gain of $10,000. But if you include dividends, we've made good money here. So what did we do? What did we do in this portfolio? It's worth mentioning. I know you're curious. Well, here's my big difference here. Well, obviously we added a new position in Costco recently, so we've built that up pretty good. This one sell of Kyndryl Holdings was because of a spin-off with IBM, and I just sold that right away. Not necessarily something I was super excited about, and we bought into more Costco with that money. Then we put in another $100, in which we purchased $100 of Vici. Then that Kyndryl Holdings money went right into Costco. And then really, the big move here was a massive sell. I sold my entire stake in Pfizer. The stock's run up quite a bit, and I just, after some comments the CEO has made, we don't want to invest in that company. We're going to be away from that guy. I don't think he knows what he's talking about, so that's fine. We sold out of Pfizer for a great gain, and we're happy with it. And with it, we helped build up our stake in Costco pretty significantly, a little bit more Vici, and obviously buying Disney off of that dip, which I think will be a good purchase in the long run. So excited about that. And if you look at where we're at with some of these, with our Costco position, we built it up pretty darn significantly, so now it is accumulating right around 3% of the portfolio, already up a decent bit. And why Costco? Well, I like Costco a lot. It's a perfect blend of not only a retail stock, but also a subscription company based off the membership base. And with the global expansion they're able to provide, this is a company that's got a very bright future, and they just consistently have been overperforming. I mean, ridiculous how great this stock is. And then with that extra cash they've been able to flow, they've paid special dividends somewhat regularly of large amounts. Sometimes they're paying $10 a share. They're paying buku bucks to the shareholders. So we're happy to build up this Costco position. As you can see, 1.7 shares only, again, because the share price is a little bit higher, but that's fine. We don't care about it. We care about the value of the company, and it's a little bit overvalued compared to historical performance, but I believe in the long run it's a great position, and I just wanted to be in there for now. I just really did. I like it a lot. So that's what happened with the M1 Finance portfolio. I hope you're excited about that. Let's get into the comparisons to the market. Starting with the Dow Jones. The Dow Jones was down 0.63%. So we underperformed the Dow. If you look on the last month, the Dow Jones is only up 2.28, and on the last 3 months, I mean, we're outperforming every other metric here, as you can see, in terms of that. Just the 5-day, our week was a little bit harder because of the earnings, but we're outperforming every single metric here. 1 year all the way through 1 month, we're outperforming the Dow Jones, so that's good to see. And on both portfolios, the S&P 500, where are we sitting at, was down only 0.31. Don't mind the loading nonsense that's going on for no reason. Down 0.31 on the 5-day. We are outperforming the 1 month for both portfolios, but on the 3-month, we're actually portfolios being outperformed. And in the last year, you see 30% growth, but you know what? I have you beat S&P 500. How do you like them apples? And then let's look at the NASDAQ, which is down 0.69 on the 5-day, up 6.47 on the month, 7% in the last 3 months, and 23% year-to-date, and 34% in the last year. So again, you know what? Props to the NASDAQ. They just continue to outperform me. I'm earning more dividends than them. So, I think in general I probably have earned more, but we'll give them credit. If I had just sank my money right into the NASDAQ here, we would have been up a little bit higher. But that's okay. I'm focusing on some of these dividend funds and a lot more ETFs than I have been historically, just to kind of prevent any nightmares in the market that may or may not happen. let's get into a couple news points, nothing too crazy. So we saw a horrible inflation number, and the CCP numbers, terrible. Not the Chinese Communist Party. Don't worry about them. We don't like them at all. They're terrible. Terrible people. Is this video going to get banned now? Don't report this, please. So October Consumer Price Index came in at 0.9% up compared to 0.5% and 0.4 prior. So not good at all. Up 6.2 year over year. Way higher than consensus. Not good. Yeah, I mean, index is rising for energy, shelter, food, used cars, trucks, and new vehicles. Everything rising. Really struggling in terms of supply chain, and that's really impacting this. And again, I think, there's some things we could be doing at an executive level we really haven't been doing, but that's okay. Everything's just more expensive now, and you have to understand that. Core Consumer Price Index up 0.6 versus a 0.4 consensus. Up 4.6 year over year compared to a consensus of 4.3 and a 4% prior. It's just not exciting. I mean, it's not exciting when you look at these numbers, and doesn't bode well for the American people, because we're paying more for everything right now. We're paying more for gas because someone's too stubborn. He wants to ban the Keystone Pipeline, yet doesn't want to buy oil from the Saudis. So it's hard to say. I mean, I get not wanting to rely on foreign governments for oil, and I don't think we should. But when you completely prevent us from actually getting that oil ourselves on our own land, then I think you've made a mistake. So you can't really do both at the same time. I mean, you gotta choose one or the other. So sorry, but it's kind of how it is. So mortgage applications shoot higher. Look at that. Rates falling. It's crazy to see on that aspect. But Rivian is going bonkers. Valuation for Rivian is going crazy. This has passed over $100 billion market cap. As far as its IPO price is going to be concerned. So yeah, it's wild how this is possible. I don't know how this valuation came into play for Rivian, but it started at a valuation around I think $40 billion, and then shot to 70. Now is at over $100 billion valuation within the span of a week. So people are excited about this company, and in my opinion, I think it's a decent short option if it IPOing at $120 a share. That market cap just isn't justifiable at this point without a real justifiable product that's out there quite yet. They're very highly backed by a lot of companies, Ford and Amazon being noteworthy ones. But I think Rivian's got great things coming for it, but I think the valuation is just egregious at the moment. And finally, with Disney earnings, worth mentioning why the stock fell. So they missed the profit guidance by quite a good margin, and missed on a revenue standpoint too. They also missed on their subscriber expectations, but Bob Chapek did reaffirm their guidance for 2024 in terms of Disney Plus subscribers. So I don't necessarily see the issue there, but some people, I guess, expected a little bit better. But they did see great rebounds in the parks department. So sharp rebound in the parks business, which is fantastic. So they did miss estimates on revenues, but you know what? Parks outperformed what the expectations were. So that's great to see. That's what I got for you. I hope you have a great one.